Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we will be discussing regarding Nifty, Bank Nifty, the key levels to watch out in trade today, as well as the main sectors that are in focus in today's perspective, as well as the next few trading session. First up, coming to the update in the global markets in trade yesterday. In trade yesterday in the US markets, all the three major US indices witnessed a sharp gain. As anticipated, the S&P 500 has continued its positive momentum and has surpassed the levels of 5,600 for the first time ever. The tech-heavy Nasdaq index surged by over 1% and the Dow Jones closed up 0.5% for the day. Going forward, we believe S&P 500 is likely to continue its upward rally and test the levels of 5,730 in the short term, while on the downside the support has shifted higher in the zone of 5,590, 5,570 levels. Coming to Brent crude, so if you see, crude has taken support near its 100-day EMA level and witnessed a smart rebound. It has ended near $85 a barrel, and going ahead the zone of 83.8, 83.6 will act as the immediate support for Brent oil. Coming to DXY, that is the dollar index. So the dollar index has failed to sustain above the 50-day EMA levels for the second consecutive trading session. Thereafter, it has resumed its southward journey. Going ahead, any sustainable move below the levels of 104.8 will lead to a sharp correction in DXY. In that case, it is likely to test its 200 EMA level, which is currently placed at 104.50. Now coming to the update regarding our markets. So in trade yesterday, the benchmark index, that is Nifty, opened with a minor upside gap and marked a fresh all-time high of 24,461. Thereafter, it failed to sustain at higher levels and witnessed a correction of over 300 points. However, in the second half of the session, the index found support near its 10-day EMA level and has shown a recovery of over 180 points. In the current rally, if we see, which began from the election day's low of 21,281, this is the second instance where the index has taken support near the 10-day EMA level and witnessed a rebound on the upside. At the current juncture, the zone of 24,230, 24,200 will act as the immediate support for the index. If the index slips below the levels of 24,200, the next support for the index is seen at 24,110 levels. On the upside, if we see, the resistance is seen at 24,390, 24,410, which is the immediate hurdle for the index. So any sustainable move above the levels of 24,410 will lead to an upside on the index towards the mark of 24,550, followed by 24,600. Now coming to the derivative data. So we see in trade yesterday that the index has ended lower by 0.53% and the cumulative open interest of the current, next and far series has also dipped by 1.49%. This indicates overall long unwinding. Among the constituents of the Nifty index, 6 stocks have witnessed long built up, 11 stocks have witnessed short covering rally, while 15 stocks have witnessed short built up and 18 stocks witnessed long unwinding. Coming to the option chain data, 24,400 strike has significant call open interest, followed by 24,500 strike, and on the put side we see that 24,300 has significant open interest, followed by 24,200 strike. For the weekly expiry, if we see, the put call ratio is at 0.73 and the max pain is at 24,300 strike, while for the monthly expiry PCR is at 1.49. Now coming to the update regarding Bank Nifty. So on the weekly expiry day, the Bank Nifty ended on a negative note. Since the last couple of trading sessions, it has been underperforming the frontline indices. In trade yesterday, if we see, Bank Nifty slipped below its 13-day EMA level for the first time after June 5th. The daily RSI has given a bearish crossover and it is in a falling mode. Going ahead, the zone of 51,900 will act as the immediate support for the index. Any sustainable move below the levels of 51,900 will lead to profit booking in the index. In that case, the next support is placed at 51,600 level. On the upside, if we see, the zone of 52,400 will act as the immediate hurdle for the index. Any sustainable move above the levels of 52,400 will lead to an upside towards 52,700, followed by 53,100 levels. On the derivative front, the July futures has ended lower by 0.56, and the cumulative open interest of the next and current and far series has dipped by over 8%, which indicates overall long unwinding. Looking at the option chain, so we see that 52,500 has significant call open interest, followed by 53,000, and on the put side 52,000 has significant open interest, followed by 51,500 strike. For the next week's weekly expiry, that is next Wednesday. So Wednesday is a holiday, so the one day prior to that will be the expiry for Bank Nifty. The PCR is at 0.6, while for the monthly series PCR is at 1.15. Looking at the key market indicators, currently the volatility index India VIX has failed to sustain above 200-day EMA level and thereafter witnessed a minor correction. It has ended at 14.43 with a gain of 1.07%. Going ahead, 13.5, 13.4 will be the immediate support for India VIX. If we see the advanced decline ratio, it was tilted in favor of the declining counters in trade yesterday. Coming towards the key sectors in focus, so Nifty FMCG, Nifty Pharma, Nifty Healthcare and Nifty Oil, they are likely to continue their outperformance in the next couple of trading sessions. If we see, Nifty PSC and Nifty CPSC has taken support near their 13-day EMA level and witnessed a smart rebound in yesterday's trading session. We believe they are likely to continue their upward journey. Apart from this, selective stocks from cement and paint sector have witnessed strong bullish momentum along with robust volumes in Wednesday's trade. Coming to the update regarding the FII DI data, both FIIs and DIs were net buyers in trade yesterday to the tune of 583 and 1082 crores respectively. If we look at the long short ratio for index futures, currently it is at 79.77 on a net basis. So there has been a decline in the FII long short ratio. This as they sold about 47,737 index futures in trade yesterday. That's a wrap of today's edition. Thank you for regularly listening to our podcast. Wishing you all an energetic day ahead. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.